Ba 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 ba. Ba ba da dee. Hello, traders. What a crazy market this is, isn't it? Eh? What a crazy, crazy market. Let me bring on, for starters anyway, what a crazy market. Volatility these days is going to destroy those who make hasty decisions. They're going to get destroyed. Let me start off with the typical disclaimer first, guys. Don't do anything, or don't take a trade based on what I say today, guys. And from a non-disclaimer point of view, every time you get into a trade, you need to say to yourself, if this is a losing trade, am I still protected? That's your number one question always. And by the way, go to johnsfreegift.com. Got a book there. I've got a video there teaching my trading system as well. And I'm running a bit of flash sale today as well too. My top 5 trading system, guys, for $4 at johnsflashsale.com. If you're looking for some trading systems that actually work, we go from there. Now, one thing I want to... Hello, everybody. Hello. Welcome to the jungle. We got fun and games. Let me bring on the good old markets today. It's always interesting, right, guys? So like, if you look at if you see where the stock market is, this is what stock market and all these markets, especially right now, if you don't have a good hold, these short-term volatility swings will eat you alive. That's why we can't make hasty decisions. Sometimes you get into a trade, and sometimes it doesn't work out for you straight away, but you need to be patient sometimes. Just let it go. We need a plan as well too. So let me... so looking at the war sheet cheat sheet, I still see... What is this here? So I still see... I've said all along for the last few months, I see the bond market being down the bottom here, like TMF, TLT, and we're starting to see that rise now. So that's actually really good to start to see that things start to click into place. I also did a YouTube short the other day as well too about the stock market. Check this out. This is where I think this is actually pretty cool. So I'll show you this here. Let me... Yeah, this one right here. So I did a short, a post yesterday, and there's something out. So let me see if I can make this a bit. Let me zoom in here for a bit more. So check this out. So this is the actual weekly chart here, right? So S&P 500 weekly chart. This is what I see happening right now in the stock market. It is so important to be looking at the big, large picture in the markets, because this is what I see happening here. We're still in a very big bull market here, and a lot of traders get it mixed up. A drop is not a top. A drop can just be part of a big bull market. And that's all this, even if we did get a drop here right now. Market's holding up a little bit stronger today. Actually, been short this market. It is so, oh my goodness. Even that Russell, check to see that Russell. Anyway, don't be short this market. People think this market's going to go down. Every time they think it's going to go down, it goes right back up again because the trend's still there. I still think we're going to get green arrow to 9,000. I think this is just a little bit of volatility right now before we see this thing go right back up again. Or scenario B is we get a drop just to make another higher low through this big bull market, and then we go back to 9,000. So the destiny is, so this is just a short-term correction. Even if we did come back down here, again, this is a big long-term weekly chart, and you see the big trend here. So I wouldn't want to be fighting the market. I think I haven't put that in the thumbnail, didn't I? Fear in the market. Don't fight the market. Oh, someone said something about my eating as well too. People get so cranky about everything, don't they? Oh, I don't like the way you eat. Really? Why don't you shave, John? Can't you afford it? Ah, hello from Ireland again. Bon appetit. Thank you. I'll tell you right now, guys. If you ever want to start to really start to become part of the few percent of society, get ready to have a lot of hate towards you. And it's one of the dark prices to pay that you don't realize, right? Especially if you're a people pleaser, and especially if you like to get along with people, which I used to be like that. I say used to, I still am, but I'm getting more further away from being okay with just like whatever, get lost type thing. Where before I used to be a people pleaser, I want to be pleasing all the time, right? And then and then you look back over time, and then you start to realize like they didn't really like me. They were just around because I was listening to their bullshit all the time. They never asked me questions, like anyway, things like that. So, but you start to realize that if you ever do that, a lot of people, one of the hardest things about trying to get ahead in life and becoming a part of the few percent that do well out of life is most people will disagree with you, because most people, the thing you're going to do is what most people think is risky, it's bad, you shouldn't do it, or they don't have the courage, so then they'll tell you you shouldn't do it. Or they would or they wouldn't do that. They wouldn't try this. They wouldn't try that. And I walk it down my actual cancer story. I'm not sure if you guys know, but a long time ago, I had stage 3 lymphatic cancer, and the doctor gave me 6 months to live. Now, at that time, when I got the biopsy done, I was diagnosed, sitting down with the specialist, and he said, you've got the cancer. To the left of me was my wife at the time and my mother-in-law. And at that time, I decided to not go down the natural treatment that he wanted to do. He wanted to send me in hospital and do all the treatment, so on and so forth. I personally didn't do that. I personally went down and did it more naturally, my path. I'm not going to get into too much detail. It's just my path. I'm not saying, I'm not recommending anything right now when it comes to this here. You guys do what's best for you. If you know anyone that's actually sick that way, but my decision was to do that. Anyway, the person me saying that is when even doing that, which was out of the norm against society, there's so much like, you're an idiot. What are you doing? You know, that sort of stuff there. And even in trading the markets, right? Trading the markets is difficult a lot of the times for a lot of people, because because if you're like, for example, me with my bond market call, for the last 3 months, I've had to deal with shit on YouTube, calling me an idiot and look at, he's underwater for the last 3 months and all this sort of stuff, right? You got to handle that pressure of people calling you that. And that's hard, right? Especially if you're a people pleaser. Oh, he doesn't like me. He said something bad about me. Like, I used to be like that, little softy. Now I'm just like, I don't care. And that's where, like, especially if you're looking for good opportunities in the markets. Yeah. So if you haven't read this one here, this one here, discipline over hope. There's a bit of a chapter here. TMF. This is the TMF here. TMF a nice rise. And this is where, like, guys, I'm telling you right now, the more you become part of these markets, the more you start to realize what the opportunities are. But it feels hard at the time to take advantage of those opportunities, right? So, for example, like the bond market example, like me, I've been in the TMF. The interesting thing about TMF, as you can see here, that if I zoom right in on TMF, I got in on TMF back in November last year. And I've been underwater all this time. Look at this here. Just one good week has wiped out a few months worth of downward movement from here. And I always say, or I did a short a while ago saying that if I did a short a while ago saying that if you have a view of the market or you're positioned in the market and your view is within that position and there's a lot of media in agreement with you, be very worried. You see it all the time, right? You just see it all the time. Let me bring up now the window. The window. Let me bring on my. Alrighty, so what's going on today? What's going on with the markets today? Nice little bounce on the Dow Jones. Still a very strong upward trend. Nothing's changed. S&P 500, still a strong upward trend. Nothing's changed. Nasdaq's rolling over a little bit here, but still in a very big upward. This. And look at the Russell. The Russell just stuck. These short-term little drops are definitely not changes of trend. They're definitely not. And we see silver mining stocks picking up. We've got the bond market starting to rise. A rise with the bond market. Oil's been having a bit of a bid too. This is my oil chart. I know you guys can't see it with your screen there, but there's oil's having a bit of a bid today. GDX, nice little bid today. Gold's still holding up as well. What's happening with silver? Silver pretty much nothing for the day. So far anyway. There's so much strength behind it. And this is where, like, it's so risky trying to short this market now because you see the buyers come back in all the time. People are still looking for a top. I just don't, yeah. Not for me. Not for me. Interest rates down again, eh? Let me show you. Let me bring on my. I'm just going to bring on my actual. interest rates down again today. I knew this was going to start to come. I knew it was going to start to come. 10-year, another drop. Look at this here. Look at this weekly chart over here. Completely breaking out to the downside. We were in this bit of an upward movement from here. Rates are dropping, which is causing the bond market to go up. I always saw this coming. It's starting to happen now, isn't it? Oh, even the 2 years going down. Get ready. When the 2 year goes down, they say that anyway. This is the whole thing about it. They say when the 2 year goes down, when the 2 year starts to drop, the Fed will start to cut rates again. So we're probably heading into a lot lower rate session right now. And that's causing one of the greatest trades I see for 2026, and that's the bond market. And it's starting to happen now. Look at this, big move. Nice big move. Back up. How good is that? And the good thing about this is you can see here just a few days has literally just wiped out all this down movement that I've been part of. And I got a lot of flack on YouTube about it, saying John's been underwater for the last 3 months and stuff like that. About my bond market call. Is actually starting to now, this couple of days has literally just wiped out 2 months worth of downward movement from here. I may have been wrong timing, but not wrong call. Meaning like I got in up here in November. So around that 40, 41 level, somewhere out there. So that's when I bought it myself. TLT. You can see it's actually starting to break out now. Is that how long I went for yesterday? Pretty much, right? Like a couple hours here, and then I went. Actually, wasn't that? Yeah, one of those days I had a big session, didn't I? It was like a 2-hour session here, and then I did another 2-hour session, 2.5-hour session with you guys, with the elite group. I love it. I love it. There's so much opportunity right now. And because mate, I'm pretty sure you can see this, but because I don't see it as a job, I'm not looking at the clock saying when can I, get a break or something like that. You know what I'm trying to say? Like, you probably see that. Like, I don't see this as work. I love it the thing is I actually do this for myself. Meaning even if I didn't have the YouTube and stuff like that, I'd still be looking at the market saying, oh, what's going on here? What's going on there? What's happening here? I'm just doing it live and talking to you guys. I would do it anyway, even if I didn't have YouTube or, the program and stuff like that. I just love having that around because it's so good to be able to have a community of people that are on the like-minded mission. And that's when you know you're onto something, right? For me, it's just about the discovery of what's happening in the markets. Hey, Owen, mate, you see the bond market starting to kick in, man. My call last year, it's starting to slowly happen now, isn't it? It's all starting to slowly happen. Same with what I was talking about with the interest rates in the elite group. You know what I mean? About that pattern that I was showing with you and stuff like that, and why the interest rate's going to come down. So it's all happening. The techniques are definitely helping us stay on the right side. And at the end of the day, that means our count goes up. And we're going to have another successful year because of it. Yeah. And that's the thing, Owen, right? And this is where the impatient people who just say for, and this is where, Owen, you can see, right? I always talk about like the art of you know, that those who are impatient and moving pretty quickly, getting in, getting out, getting in, getting out, or they would be fearful or they'll be impatient. If they did get in the same time I did in November and they watched this go down, 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 down here, but they weren't patient enough, it's those people that are not patient with position sometimes, Owen. And Owen, you probably saw this last year, right? Sometimes it took 2 weeks for trades for me to work out, but start to move in my favor. But when they did, I was making a few 100% return on my trades. You saw that live last year. So Owen, this is just an example, right? That the reward comes to you if you can just be a bit patient, right? So we put on a trade. Yes, you might not get rewarded for that trade for 4 or 5 months down the road, but it's better than looking back and then taking a big. Do you know what I'm trying to say? This is where, like, at the end of the year, how did we have a good year? You know what I'm saying, Owen? I've always talked about this with you guys in the elite group. I'm looking to have a good year this year. So what do I need to do? Okay, I need to, on this position here, I need to be patient. Don't get in, get out. Just be patient. Let it go. And then before you know it, it does start to kick into play. So yeah, you are right. It is actually, I didn't actually expect it to happen this quickly, but it's actually starting to form now. We're early today. Are we? To the moon, to the moon. Top spin. Hey, top, where are you from, man? Asia. What, Bali? No, John. TMF to the moon. How high do you think TMF will go? Depending on the timeline or the time frame, should I say, of what you're looking at. So short-term level basis, I see. Let's start looking at some levels here. So the first level would be at least this 44 level. That'll be the first level there. So that's the first level overall. But possibly, well, there's 2 major levels that I see happening right now. So probably over the next few years, I see it potentially getting to around about the 150 level over the next few years. But on a conservative level, what I'm looking at for this here, and this will give me roughly 100% return on my trade, even on my investment, should I say? Because I've got an investment going on. I'm in roughly around where we are right now, so I'm basically break even right now. Is around that $80 level. You can see that $80 level back here. Well, you can't even see it. Let me go back to here. We'll bring it up there. There we go there, right? There. So what I see going overall, right, as you know, by making a call like that to 80, it goes up for a couple of days and then we have a bit of a pullback for a week or two. And then it goes up, right? That's what you would expect from a bull market, a bull phase. I think a lot of people, there's a lot of trades out there that get mixed up, even like in the stock market. The stock market goes down for a couple of days and they think the top's in. And they just like, they completely forget what a trend is. So that's what I see happening right now. Short-term level basis, I see we're probably going to get to just around that 44 level. But an overall basis, we have that 65. But my target anyway is for this year, my target is around about that 80, which is that major resistance over there, which is not a big retracement, as you can see on this TMF. It's only from there to there. That's that retracement that I'm looking for. And if we do get that by the end of the year, I'm probably going to make 200-300% return on my option trade. And I'm going to make 100% return on my investment as well too. So, so far, I'm pretty sure I'm basically at break even now on both my investment and my options. My options still might be slightly underwater. But my investment, I think it's it's around that $40 level. So it's basically break even now, my investment there. So this is where like I've always really liked this. You know, if you think about that, right, like a $1 million position in a TMF position and letting it go within 1 year could make you $1 million. Or if I bring it back down to a much smaller number, you know, if you're looking for these good returns, these are the positions that I have within my account here. And what I'm doing. And this is where like some really big money is made by I guess positioning from here, but just being patient as well too, or even like 100 grand. And this is where like I love trading options, because I know, like for example, trading options, I have around $30,000 right now in an option trade. Yeah, around 30,000 in an option on TMF right now. And I know if this thing does move up there, that $30,000 trade it could be over a 6-figure profit for me by the end of the year. I say by the end of the year because you don't know. Like this could happen in the next 3-4 months and just has a really big move by June, July, August, and then I'm getting out. So I say within that 12-month period, that's what I'm looking for from there. My options right now expire in January next year. So I've got that plenty of time just to let it go. And then obviously I bought it as well too. So that's my position on it as well too. I have a really big position. I say big. It's a big position, but it's still only a small percent of my actual investment account, and then also the options there as well too. So that's a lot. That's what I saw. I saw this coming, Trapper. I just saw this coming. I didn't. And this is sometimes Trapper. The big thing about TMF is that we're not going to just look at TMF, right? You want to look at some of these things. If we're going to make these calls, sometimes it takes a few months for it to actually start to happen. You know what I mean? And this is where like those who are looking to make money really quickly and not be patient and give it a few months sometimes for it to start to play out. It's those who look back 6 months later and say, "Oh man, I should have stayed in that." You know what I'm trying to say? And then when you have that patience there, that's when you get rewarded. I use your scan style. This is my first trade in 2026. My scan style. So yes, that's what I see with TMF. Always be looking at the big picture. There's a lot of traders out there that start, and I understand, and they're focusing so much on short-term picture. So for example, they would be focusing on, with TMF, they would have been focusing on, but John, it's going down. Like, you're an idiot. Why are you long this market for? Like, this is what they're looking at. They're looking at 2-3 months worth of data. And while that's still good, it's not the most important thing, because I've learned the forest from the trees is the most important part. That's that For example, that's the weekly chart there, and so on and so forth. But it takes a while. It takes a while to start to understand how that actually comes into play. Like, how's the weekly chart really work? It took me a long time to figure it out. Every time I think it's going to go down, right? Look at the Russell just holding. Every time I think it's going to go down, it doesn't. Oh, thank you. I agree. Appreciate you covering the bond market. Everyone is so negative on it. Well, Trapper, now you know why I'm so bullish on it, right? What you said right there is one of the reasons why I'm so bullish on it. But I do know, me making that call, Trapper, and being public about it, I'm gonna get some heat. Because it's now, if I did make that call with TMF and most of my comments were in agreement with me, I'd be worried. I'm like, oh crap, it's the wrong call. You are my favorite future podcaster. You recently nailed the silver trade. Thank you. Yeah, I traded that. I made 330% return on that option. Well, on that silver trade. Now, Trapper, by the way, I didn't expect it to happen that quickly, by the way. This big drop here in silver, I didn't expect to do that. I was expecting maybe a few days, not one day. But after this big down day, that was my trade done and dusted. But if you look at that, Trapper, right? If you look at it, lessons from the vault in the last couple of months have been the best opportunities are against the noise. And so that's where when I was saying the market was going to go down in silver and gold, I didn't know when. So I could never pick the exact top. But as this market was rising through January, I'm like, guys. And then when I did see, and I talked about this actually on the day as well too. I'll bring this over here so you can actually see it. If you actually see this here, you see that this volume spike here, boom, and that movement from there, I knew by seeing this volume spike here, this big volume spike right here that we had, and the move up, I knew that we're getting ready for some sort of correction because it was just the pattern I saw that we're in a very vertical move. We're already in a bubble, and we got an expansion, and we got a big move up, and we got an exhaustion volume. And the herd was calling me an idiot, and you have no idea what you're talking about, and this time's different, and so on and so forth. So that's where I'm just like, okay, I don't know when this is going to happen or how it's going to happen, but I'm actually I'm really confident in it. And the thing is that markets work the same way. If something goes like that really quickly, that's called bubble. That's not trend. Yes, it's trending up, but it's actually now in bubble territory. It's not just it's not a strong trend. It's now a bubble, and bubbles burst. And so because we have a big vertical move up, it's in a bubble, and we have an exhaustion volume, and the herd was calling me an idiot and I have no idea what you're talking about. And I'm like, yes, I'm on the right trade. So I bought an option. I actually bought, I think it was like I bought 3 months, I think it was 2-3 months worth of time because I didn't know whether I had to be in it for a few weeks before the drop happened. No, I had to be in it and then the big drop came in. So I hope you can see, trader, trapper. I hope you can see that a lot of my calls like that are simply because I'm listening to the noise, and when the noise becomes too noisy on one side or the other, I know the right decision is to go the opposite. You know what I'm trying to say? So again, the bond market, same thing. You're an idiot, John. It's going to keep going down. Don't you understand? China's dropping their bonds right now. Everyone's running from the US dollar, like all this sort of stuff. Okay, it's a good buying opportunity. And this is where people try to use the common sense. They try to use common sense or logic. Wow, everyone's saying this. Everyone's saying this. Man, they must be right. And then they're wrong. And then it really screws your head. Like, hang on a minute. All I heard was silver's going to 200. All I heard was this was the great reset. This is why gold's going up and the central banks are buying. And that's all I heard. And even people coming out and saying 15,000 gold and it's never going to go down. And this is the great reset we've been talking about. And all these people coming out. And then it does the exact opposite. That's when it screws you. Like, hang on a minute. And I lost a lot of money. And the worst thing you do there is then you load up a lot of money on one trade, which is just the worst thing to do in any position. And then you lose your absolute rear end on it. And then you're scarred for life. Trapper, you said, isn't TMF carrying a lot of shorts currently? Thinking major short squeeze this year. I wouldn't be banking on that. I don't know. I'm not banking on that myself. I'm banking on two things right now. One, it's just simple cycle analysis. We're in a cutting phase. We're in a rate dropping phase for the next one or 2 years. Secondly, I'm going where it's the most hated, which is the bond market. So it's the most hated right now. Out of all the markets, the bond market's the most hated. So I'm like, okay, it's probably the best opportunity. And three, I've been getting absolutely just hammered for it for my call for the last 3 months. Now, I say hammered. I wouldn't actually. Hammer's not a word because most of it I don't listen to anymore. Anyway, especially sometimes when I see someone commenting on my YouTube video and then I go check out who they are and it's a 15, 16-year-old kid. Like, it's like, oh really? You know, my oldest son is older than you. I'm not joking. This happened about a month ago, I think it was. I had this person commenting on my YouTube videos, comment. And then I went to his YouTube channel and he's like a kid. Like a 16-year-old kid or something like that, like a little kid. I'm like, my oldest son is 18 years of age. He's 18 this year. I have a son that's 18 this year. I'm like, my oldest son is older than you knucklehead. Oh, that's who I'm dealing with sometimes in the comment section. Whatever. Who cares? So it's not easy. And this is the nature of trading like this. That's how reason why life is hard sometimes, because when you try to get away from the 95%, become part of the 5% or the 1%, you got to go against the herd, right? You got to go against the crowd most of the time. You got to go against what your old friends and your family and people around you are going to tell you probably what's the right thing to do. And that's where it's hard, right? It does get hard like that. I don't know. Ted. The Australia is 3.75% and Australia's. If Fed cuts rate and the US falls, don't put them together. Who said that Fed rate cut equals US dollar going down? There's two different things there. US dollar going down and Fed rate cuts. Okay. The AUD may rise. Well, the Aussie dollar. Well, I actually called bottom on the AUD USD pair. I'll show you this here. I'll show you this chart. I'll show you the pattern here that made me call bottom on the AUD USD pair. If we're looking at that. So here, this was the bottom. This was the bottoming pattern here. Meaning, as you can see here, that weekly. This is the weekly chart to the left. So that's that weekly chart to the left there. It's the big picture weekly chart there, and this is the daily chart to the right. You can see here we actually had a low. We had a big flush down, and then we had a big turnaround. As soon as this happened, I called bottom in the AUD USD dollar, and that's what caused the Aussie dollar to actually rise against the US dollar. So I've actually been bullish ever since around about probably around that when the US dollar when the AUD USD got up to around about 63. When it got up above here, when it got back above here, I realized that this sharp move down that flushed down and the flush back up real quickly. If that ever happens to you guys, meaning if we've been coming down for a while, coming down, and we start to form a significant support, and you get a pattern where it looks like it's going to break down, but it completely reverses very sharply. That's likely to be a major bottoming pattern, and then it's likely to start to move up from here. Now, this is over 1 year worth of movement, right? So it doesn't just go straight up. It takes its time, right? But the overall trajectory is to the upside. So that's a bit of a pattern for you guys. It even works on the stock market. So if you ever see a major support there for a while and we get a flush down, like it's going to break down, but it completely reverses really quickly, that's likely to be a bottom. And then we're likely to start to change trend, especially if we've been coming down for a while. And then we get that pattern. It's pretty powerful. I was actually hoping to get that out of oil, by the way. Anyway, so I'll continue this quote here. Would Australia rate drop even? Would Australia's rates drop even if inflation stays high, with the talk of more hikes? Is the RBA squeezed? Yeah, I'm not too quite sure what's happening with Australia. Ted, I guess, are you from Australia, Ted? I'm guessing you are, right? So there's a lot of if, buts, and scenarios there. Like no one really knows. You know what I mean, Ted? Like I can give you my theories and my opinions about it. I think we're ultimately heading into a recession, even in Australia. And when that happens, they're going to drop rates really hard. I don't know how that's going to form though, but there's something really major that's going to come in the Aussie market, because the Australian market and the Australians haven't had a recession in a long time, and that's coming. There is one coming. I think it's been like what? I think our last recession was the 80s, wasn't it? I think it was in Australia. So we were the Australians, but the US have obviously gone through a lot more. But there's something really big building up. I just don't know why the Australian government just keeps spending money though. Anyway, there's a lot of theories and opinions that we can put out there, but no one really knows. I do ultimately think there's going to be a lot of rate drops coming over the next few years, as we head into something much bigger. So this rate hike that the rate hike that happened recently in Australia, I think it's going to be short-lived. because when the yeah. Oh, Netflix. A UNH stock, yeah. Um, let's go to UNH. Yeah, I know there's a lot of bullish calls around this, hey. I mean, there's a lot of bullish. I know Warren. I'm pretty sure Warren Buffett bought it. I know Adam. I think it's Adam Koo on the internet on YouTube. I think he also was very bullish around as well too. Mm, it is just something weird is happening with this company right now. I'm just looking at this daily chart here. This is crazy. Like it's not smooth at all now. It's big gap down and big gaps up and big gaps down. And let's look at the weekly chart here. Yeah, this may be. Oh, yeah. Yeah, I don't know. Like this is big false breakout up here, as you can see. I wonder if. Yeah, look at that. Yeah, I don't know. Like I guess fundamentally it sounds like what I've heard sounds good, but I'm not the fundamental guy. I have no idea about that sort of stuff. So for me, I wouldn't touch this. I'm not getting anything from this here. So I wouldn't touch this. But that's just for me anyway, the way that I like to trade. I like to get some sort of sense of what's going on via technical analysis or via herd at least. So there's an in between here. Time by time, put on risk disclaimer. Hey, top spin. Are you saying I should do it every 5 minutes, eh? I need to do it every 5 minutes. No, responsibilities on everyone. Responsibilities on everyone. And I always say, my number one thing is every time you get into a trade, you must ask yourself, if this is a losing trade, are you protected yourself? And that's the truth anyway. Doesn't matter how confident I am in a trade. Some of them are going to be losing trades. What happens when that happens? Because that's going to happen. Are you protected? Most people are not. Most people, like one bad trade blows up most of their trading accounts. Like, boom. It's like gone. You do well, and then one bad week or one bad month and you're destroyed. Like, oh, stop it. But I guess a lot of those traders are gamblers. They're not traders, they're gamblers. Oh, let me try this. Oh, I think this is going to happen. Oh, let me go here. Let me try this. Oh, this guy said this on YouTube. I'm going to do this. Oh, this other guy said do this on YouTube. So I'm going to do that. It's like all over the place. He's not professional. Professional uses like rhythms and systems and so on and so forth. Oh, public holiday on Monday, isn't it? Market's closed on Monday. Actually, the US market's closed. I think I might have to go look at Bitcoin then on Monday. It's like what I need to look at a market that's open. Let's go to, let me show you this here. So Trapper, mate, I'm not sure if you're still part of the room, but I have talked about this before. When I look at the Wall Street cheat sheet and I look at the herd mentality, down the bottom here, capitulation, anger, that's actually where I see the bond market right now. So that's why I'm very confident being in, even if it's not a very long-term position, like a 5-year position, like I have with the metals and miners, like I see a big moves coming in the next 5 years out of that. We're going to get our corrections, of course. But when I'm looking at the markets, I see down the bottom here, this is where I see the actual bond market right now. And then just slowly makes its way up. Like it's been slow down now. And then my silver call, the reason why I made the silver call was one, technical analysis, but then also secondly, I saw that I knew right up here, we will get into this point right here. Euphoria. It was screaming at me, not only from a chart perspective, because there's a massive vertical move to the upside. And nothing goes vertical that move without coming back down. Nothing does. And if we just look at markets, you see that it's just the pattern repeating itself. It's nothing, it's not special. It's like, oh, well, that's what happens most of the time when you get vertical moves. This is what's probably going to happen. It's quite common sense, right? What we need to do, we just need to look back at past, look at the way these things work and see then what's likely to come. And then we trade the probabilities, we trade the probability of that outcome, not the opposite. So for example, in a very big bull market like we're on the stock market, any short-term move, and even if we did get a 5 or 10% correction out of the stock market now, that's a short-term correction. It's not a bull market ending. So there is a massive probability of this major, even if we did get a correction, that this bull market's going to continue back up again. I'm going to see a big move up because that's the probability of that happening. Monday close, no trade hour. Yeah. So that's the only reason why. And the only reason why I did that, because it's just the same pattern, right? All I'm looking for is patterns that repeat, patterns that repeat, patterns that repeat. Patterns and cycles, patterns and cycles. And that's basically what reason why I put this together for you guys, right? This one here, because I put together over the last 20 years, I put together my top, basically, what's that, 5? Yeah, my 5 trading systems, especially even my number 1 trading system here. And once you understand the patterns, that when you see the patterns appear and they repeat, and most of the time they produce a good income, a return, then that's when it starts to do really, really well for you. But then obviously that's where, like, also, you know, this is the reason why I put together this book as well too, because the systems is one thing, but if you don't understand the market psychology of how markets work, and that's the reason I put together this psychology book, then you may have the good trading systems, but if you don't understand the psychology of these markets, and it's only come from my 20 years of experience on the highs and lows and thinking the wrong stuff, then it's just been it was always the hardest thing there. Anyway, that's free for you guys if you want some good resources. johnsfreegift.com. Or if you'd like a bit more hand-holding, you might be good for my elite coaching group. You can apply for that at getjohntop.com. Let me go back to my TC2000 now. All right. Life gets so much simpler, guys, when we keep an eye on the big picture. So what I mean by that is, like, if we're looking at, say, for example, the stock market here, and if we take everything off, but we're just looking at, if you're like looking at a chart like this here, and you're seeing this big down bar here, oh my goodness, like when we go through these volatile times here, like we right now, if you are short-term trading based off this, you are getting destroyed right now. believe in America. Thank you. To the moon, to the moon. TMF top. To the moon, to the moon. Lots of green across the screen today, isn't there? Hey? Lots of green across the screen today. Everything's pretty green today. Even Ethereum's green today. Go, Ethereum. Go. Well, it's bottoming out. No. Even Bitcoin, eh? Bitcoin so far, anyway. Looks like the cryptocurrencies are leading the way on my ETF list that I got here, which is like 27 major ETFs here. Cryptos are percentage-wise, anyway. Platinum. Yeah, I personally, my favorite charts are like this here, guys. Myself, I just love charts that look like this. Meaning, I can look at the big picture. I can look at the swings. You look at trend analysis, right? And this is where like a lot of traders get in trouble because they see these periods through here and through here as the market topping, but it's not. It's actually just, it's making trends, right? That's all what it does. So the stock market right now, it's the same thing. Like you look at the stock market, look at the NASDAQ. We're just going sideways here. So even if we did drop down through to here, it's still part of a major long-term upward trend. So even if we did get this, oh no, the sky is falling. And then we'll get something like that. And that's where, once again, like if you go to, I was sharing this earlier, but it's still in a very big bull market. So even if we do get this is a big bull market, guys. And until it starts to give us a definite signal that's topping, let me show you this here. Oh yeah. I'm also giving away a free trading course, guys. When you go to johnsfreegift.com, I give away so much. I give like 8 video trading course and a book and courses that actually get ahead in the markets. Anyway, this one right here, right? So this is I was showing this before, but this is what I my post just recently. And this is the S&P 500. I made it all nice and pretty so everyone can actually see visually. This is a big long-term weekly chart. This is a big long-term weekly uptrend. People have to stop thinking that even if we did get a drop here for 5 or 10%, that's the start of the big collapse. It's not. Look at the big upward trend. Big picture, big picture, big picture. And once you understand the big picture, once you understand where we are right now, and even if we did get a drop for the next couple of weeks, where are we in the big picture things and what's likely to come after that? So no, even if we did get a drop here, it's still just these major swings on the up. As you can see, this is a major weekly chart and it's showing you, even though we do get these corrections, even this point through here, right? All this move down through here was just making the higher low, and then they're making another higher low. And if we did get a drop through here, which we may not, it may just go and just continue running. So either way, we get a drop, that's going to be fuel for a move, or we break and then we go for a big move. Either way, right now, there is a massive probability, no certainties, that over the next 12 months, we're probably likely to see at least an 8,000 plus print, I would say, on a bare minimum on that level there. Now, again, there's no guarantees this is happening, right, guys? Like, I don't know, definitely. But my projections based off my actual, and I'll show you this here. Where are we here? So if I bring up the actual charts, the reason why I've got 9,000 as a target, it's not me making something up. It's me showing you what these patterns actually produce. And what I mean by that is that whenever you do get channels like this here, it's called a channel projected target. So what that means is if you get a channel like this here, you measure from the low to the high, and if it does break up, well, then you know where it's likely to run to, which is the target there. If you look at the Nikkei already did it. Look at this here. It's the same pattern. So I'm not making a number up when I say 9,000. It's not me just plucking a number out of the air, right? Look at this here. Same thing. Oh, look at that. Go. Right? Look at this here. Big, beautiful upward trend. Same thing that's happening in the stock market right now. It's the same thing. What do? Measure from the high to low. Then you project it up and look where the Nikkei ran through. This is the weekly chart. What happened to the DAX? Same thing for the DAX. Look at this here. This was the DAX. DAX actually had a bit of a channel here, right? Look at this here. You could even say that the channel was through there somewhere. But either way, what ended up happening? You measure from the high to the low of the channel, right? Wherever it breaks out, you project that up like there, and therefore we're likely to get to, again, on a low level, we're likely to get to there. So when I say this is a number, it's just a pattern that repeats, right? It's a pattern that just keeps repeating. Big picture analysis. So saying like here, as you can see, channel, break, target. Same thing here. Channel, break, target. S&P 500. Channel, break, target. Woo! It's just something that happens most. Now, there's no guarantees, right? But if we're looking, what's the probability if certain things happen in the markets? That's why I've always said once we get above 7,000, if we do break and hold here, and we break up through here, well, you know where we're going, right? Well, we know where we're likely to go anyway. And by the way, when I say this, this is how you start to create big profits, small losses, right? Because if this did happen over the course of 6 months and you were with options, you're talking like, depending on the option, that could be 400-500% return. Buying an option. Now, if you bought out of the money options, you might be risking 100% of that option. Now, not 100% of your account, but say you took on 5% of your account and you put on an out of the money option for 6 months time frame, and you did like an 8,000 option or something like that, and you took 5% of your account, your maximum risk would be 5% because you could be risking the whole lot there. But if it did happen, that 5% of your account, right, could now turn into a 20, 30, 40% growth on your account because of the move from there. I'm always looking for these trades because I know I'm going to have my losing trades, right? Now, out of the money is more risky. I always like to do in the money options myself. And that's what that's how we have successful years, right, guys? Because we're going to have our losing trades. And that's where, like, my coaching program at getjohnshelp.com, you'll be able to see all the details over there. That's getjohnshelp.com. That's the elite coaching program. It's only a small group. It's only 20 people in there right now. 15 to 20 people, somewhere there. It's only a small group. The whole thing about this here is that I want you to have a successful trading career. How do we set it? How do I set myself up this year to have a good year this year? And I know reality says I'm going to have some losing trades. Even if I had some really big losing trades. Now, big losing trades meaning like if I had like a 60 or 70 or 80% loss on a trade using options. What do I need to do then? Okay, let's do a 10% of my trading account or 5% of my trading account and start to factor that in. But then the profitable trades, I need to make sure that a handful of those are then the big movers, the 2, 3, 400% growth. And at the end of the year, I can look back and say, oh, even though I had some losing trades and I'm going to have that, I need to make sure that I'm getting, and this is how I'm looking for the potential of something to happen because it's the pattern. And if that does happen, and I'm utilizing things like leverage, this is where the leverage could be like, the profit could be 4, 5, 6, sometimes even like if this happens for me, if this actually happens this year, I'm probably going to make like I've got 2 option trades going on right now, and in the money and out of the money. The out of the money one possibly could make 5 to 10,000% return for me. But I also do know that's a very risky option because I've got far out of the money there. So it's just probability, guys. It's all the same thing. The patterns that repeat. And I use the pattern to give me the probability of the call. If people are calling top right now, no. And so that's why like I go to here. Oh, what did someone say? So you started editing posts. Hey, Johnny? It ippy up or down this hour? Jeez. Should... Yes, I edited the post because I had some spelling mistakes there. I had to correct them. You ning nong. So we wait for the market to decide, then either wait for pullback to support line, or it goes straight to a blow off top. Well, I'm long the market. I'm not going to wait. If I'm wrong short term for the next month, okay, I'm going to handle that. Either way, as long as I give it time and I'm not worried about the short term next 1 or 2 months, but if I'm thinking 6, 7, 8 months out, like that time frame, like June, July, that's my August period, like that sort of period. If I'm thinking that far out, then I'm not really care about what's going to happen in February. If we did get the drop in February, so for me, I'm not going to try to be smart in the market. I get in today, which I am actually. I was in a few months ago. I'm still in right now. Market goes down for a month. I don't care because we're probably going to head back up again because we're in a very big bull market, and this drop is just part of the trend. A drop in this situation is what? Making a major, this is the major bull trend here. Major bull trend. Market go up, market go down, market go up. And this is where, once again, a market dropping for a couple of weeks is not the top. It's making the trend. And then it goes back up again. Makes the higher low. Higher lows, upward trend. It's something that's, it's really interesting to see that the first hand of technical analysis is trend analysis. Lows and highs, lows and highs, lows and highs. Right? And as you can see here, right? This is the major trend that's forming right now. That's the major trend there. Major highs, major lows. So if we did get a drop to the downside through here like that, that's still just that's still part of a major trend, even though it may be dropping for a while, 2-3 months. It's just part of the big trend here. And then people think the big 80% crash is coming here, and they think, oh, this is going to happen like this. And it doesn't, and then you start to see that going on. Because it's just making lows, higher lows all the way up. And this is something when you start to understand this big picture analysis, this real big picture analysis, and you understand where we are, you start to not be so concerned about the short-term day movement. Like I'm looking at a big weekly chart here. And you start to see where we are in the forest from the trees. And as things start to unfold, you see what's going on and what's happening. That's why I saw, and once again, for you guys that know this, my other big markets that I was talking about was what? XOM. I saw XOM having a big move soon. Now, I didn't know it was going to happen this fast. Look at XOM go. You guys know last year, right? Last year, I started talking about 3 different stocks. And the 2 major one was what? XLE and XOM. I started talking about last year. I said, we're getting ready for a big move. And it's just based off understanding the markets. Again, in my free trading course, guys, I talk about this pattern here, which is the time phase here, and how I saw that coming. And even XLE, right? XLE. And look at XLE, big breakout here. So both these markets, and again, even if you're new to my YouTube channel, I want to say welcome. if you go back and watch some of my YouTube videos I was doing towards the end of last year through here, there was 3 markets that I was focused on. It was XLE, XOM, and then CVX was the other stock here. And I was looking for, I started to look for a move out of that level from there, which was basically that. And I was looking for a big move to happen out of CVX from here. So my thing for the last 4 months has been, we're getting ready for a big drop in metals. We got that. We're getting ready for a big breakout on XOM, XLE, and CVX. We got that. And we're getting ready for the rates to come down and the bonds to start to go up. And we're getting that. So they've been my 3 major things I've been seeing in the markets here. Also, what I'm saying right now is we're getting ready for a big move in the stock market soon. I don't know how, but remember the story, right? Is it scenario 1? Is it green arrow or blue arrow? To me, I don't care. I don't have to worry. The high probability, not certainty, risk management, this can be a losing trade, but there's a high probability over the next 6 to 12 months, we're likely to see at least an 8,000 plus print. How that gets there, I don't know. I don't care. Just put it on. 6 months later, make money. Simples. And if I don't, I've got risk management in place. Think about this from a perspective of saying in the money option right now, right? And in the money option right now, and the market does go down like that, I might be like, what, down 50, 60%? Call it 60%, 70%. Oh, big loss, right? So, but if the market does start to do that 8,000, guess what's going to happen to my option? I'm going to be up 200-300%. So in that case, if I have 10% of my trading account in an option position right now, and I do that 50, 60%, I'm down what, 5-6% on my trading account? Okay, that'll be a big loss for me because it's in the money option there. Okay, I understand that. 10%. But if it does get to that 8,000, if it does get to the 9,000, if it does get to, let's say, for example, 9,000, my best case scenario, I'm going to be up like 500% return. Now, I'm risking roughly 5-6% on my account if I'm wrong. But if the best case scenario happens, I'm going to grow my account by 50%. 5-6% risk, 50% growth. This is the nature of success in the markets. I don't know if it's going to be 100% correct. I don't need to know. Even if I'm 50-50 right with that call, I'm going to make a lot of money this year. Sit back, relax, put your positions on, give it plenty of time. And this is where I'll tell you, day trading will destroy your life. Day trading will destroy your life. Short-term trading. Oh, quick, get in, get out, get in, get out. It'll destroy your life. You lose a lot of money, you're stressed, you put a lot of weight on, you fight with your wife, you spend no time with your kids, and you feel shit because you're not even doing well. Day trading, short-term trading will destroy your life, I promise you. I was there for so long. I've been trading the markets for 20 years. But this type of trading gives you a high probability of generating a good return. You just got to give it time. Now, I also do understand that if your mindset is I'm coming to the market to make an income this week, you know that's not how it works. And I'm telling you the reality of it. And unfortunately, like I spoke to someone just recently, he's been trading since 2018. You might be listening to me right now. He's been trading since 2018, trying to make a regular income from the market. And it's not like that. It doesn't work like that. You don't make regular income, but you can make chunks of big money. Right? So for example, if you had a $100,000 trading account and you had $10,000 on, say, SPY, here's an example, your risk out of that $100,000 would be maybe say 5 or 6 grand, maybe more, right? But if that one trade did work, then you could make $40,000, $50,000 from that one $10,000 trade out of the $100,000 trading account. You still got $90,000 there to do other trades. And so by the end of 6 months, your account could be up $40,000, $50,000. So you make chunks of big money throughout the year and not small money, not small profits. And this is how at the end of every year, you have a really good year. What's the time? I gotta get to my leg grip soon. That's what it's about, guys. Historically, well, that's it there. Yeah. So now you know why I'm saying here, guys. Just look at these stuff here, right? If you're wrong and you don't make money, protect yourself. If you're right and it does work out, try to be in a situation where you're making a big profit. Have that as your foundation for the rest of the year. Historically, let's go. Let's bring on all markets here. Let's zoom right in for this big picture and just listen. Let's go. Historically, treasury bonds are one of the safest investments. It is placed to be going forward into recession. Yeah, trap, mate. Yeah. Well, the thing is, trap is that, but the headlines and the news is that everyone's dumping their bonds right now because they don't want to be part of the US dollar. So the herd mentality would be like, that's a risky trade. So I understand what you're saying there, but that's where the herd mentality would be saying different. Just give me a sec, guys. All right. Right. Topspin. Since Monday close, I sold part of my to the moon. You know, top up. I'm going to bring that back soon. You know that. To the moon, to the moon. I actually stole that to the moon, to the moon. That saying, from a guy on YouTube. He's got a short there, and he does these shorts. You guys might have seen him before, right? And he does this like CPI 3, 2, 1, up, and he just gets, and then like to the moon, and then he makes like $1,000 off the trade, and he's like, yes. And so that's where I got it from. And I watched a few shorts of his, meaninglessly scrolling through the YouTube one day, the YouTube shorts. Came across it. It's like, that's where I actually stole it from him. So I give him credit. I don't know his name, but yeah, it was one of these guys like, PPI, let's go. CPI, let's go. It was like a massive gambler. And he's like, yeah. Maybe this is going to be a short-term little hold here before we get a drop. That Nasdaq's looking quite on a short-term level there. Let's go. Actually, you know what? Let's go look at some of the to the moon, to the moon. First time I bought options. Nice. To the moon for thrifty. Hey? To the moon for thrifty. Now, can you tell me, Thrifty, what you did? Like, how much time did you buy? Did you buy in the money? Did you buy out of the money? Let me bring this up to here so we can get a bit more view here. I'll bring this over here like that. Jeez. Yeah, okay, so that's that there. Okay, we could be getting ready for a bit more of an extra drop here. That Nasdaq short-term bit there. Bit of a lower high situation going on. January 2027, 90 calls. 90 calls. Whoa, way out of the money. Now, Thrifty, I just want to let you know that the nature of that is it's going to be huge swings, right? So you could be down 50% in one day if it does have a bit of a good drop in one day. You know what I mean? Because you're so far out of the price or with the call options there. Above the price is called out of the money. Below the price is called in the money. In the money, a bit more of a safer, but they're more expensive. But if you're looking for a smaller risk on your account there. So just understand that. The worst thing you can do is have a big position on your account by buying that option there. Because if the worst case scenario happens and it doesn't make a profit, what you're buying when you're buying that, especially you don't buy much, okay. But I'm also either way, I'm just trying to educate you about how this works, right? So you can understand as it starts to unfold, because it's so far above the price where we are now. So you bought a $90 option. Nah, I'd have to say that's a bad decision. I'm just looking at TMF right now. I'm trying to see where $90 is. You bought a $90? Okay, two things that's going to happen here, Thrifty, okay? Just going to let you know exactly how this is going to work here. Bit of a free coaching for you. Firstly, it's so far out of the money that two things that's going to happen. One, it could lose 80 to 90% of its value literally overnight. So your option could be down that far because it's so cheap. You bought the really, really, really cheap option there. Secondly, what's going to happen here is that this may rise up to, it may be right. And we start to get it. Let's say, for example, here. And this is obviously the TMF chart here. And we do start to rise and we hold here and we start to rise up to 46, 48, 52. And your $90 option hasn't moved yet. So you could be right with the call, but because it's so far out of the money, it doesn't move. Now, if we do continue up and we start to get something like this here, then this option here can explode to like thousands of percent growth. But you need that move there. You need for it to start to get closer to that price there for that to happen. So what's probably going to happen for you is we could rise up to 50, maybe as much as 60. And this one here probably won't move as much. It's not until we start to get closer to the price that they start to really jump in value. So that's just be prepared to expect your option not to move much when if again, and this is where for me with my TMF trade, I actually bought at the time, I actually bought a 40, my option is a $40 one, $40 January 2027. So so just your first time experiencing options, this is what's going to happen with you there. So again, you may be right, and it may start to rise up to 50, right? You may get this may start to move, have a nice move up to here. Right, we may get a nice rise up to that level there. But because you're so far above the price, you bought a very cheap option, but that's how the options are going to work. Now, the only reason why I can help you with this, Thrifty, because guess what? You know how many times I've done that, and I didn't understand why. So in the last 20 years of actually trading options, I've experienced, my goodness, the market's going in my direction, and my option's not even moving. What? I got it right, and I'm actually losing money on the trade? What? It just doesn't make sense, because sometimes this could actually rise up to 40, 50, and your option loses 50% of the value. Like, that doesn't make sense because it's so far above there. The safer option for me is always at or in below the price. And that's where I think the market was here. And then that's when I bought a 40. For me, it was a $40 option that I bought because that was around about the price there. So as this thing starts to move, then my value is going to increase. The only thing, though, this is where like a lot of people get this mixed up, is that they're obviously a lot more expensive because they're here. So they think they're a lot more expensive, so therefore they're going to go buy the cheaper one. So for me, it's all about the risk on the account in total. So the better options is always in the money, below the price for call options. Even though they're more expensive, you're looking at the risk on your account there. So there's just a few things there to understand about options there. You've obviously bought a very, 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 very cheap option. And I think that's just way too out of the money. I don't think we're going to get to 80 by the end of this year. We may. Oh, yeah, no. It's I think that's just a bit too far out. So don't expect to do too well out of that trade. That's just what I. Yeah. Well, Thrifty, obviously I'm not telling you what to do, right? But I'm just trying to educate you about how these options work, you know what I mean? So you can understand it all there that way. And so when you're doing this sort of stuff, you can understand, you can understand that sort of stuff there. And the only reason why I know Thrifty is like, for example, like I'm in the S&P 500 right now. Back down the bottom here, I did two options myself. I bought, like this true story. I bought down here, I bought two options. I bought an in the money option. So I bought down here option. And then I also bought way out of the money option. You know what's happening right now? My in the money option is still up about 20%. So this option here is up about 20%. Now, this is a much bigger position, by the way, because it's in the money. Then I took a small portion and I actually bought a way out of the money option. Way out of the money option. It was actually not there. It's actually a lot higher, by the way. It was like up here somewhere. Like we're talking like up here somewhere. So this is where I bought another call option. This one here is down about, 60% now or something like that. So this one here is actually down about 60% right now for me. Now it's a much smaller position. I have a very big position right here. This bottom one down the bottom here, which is the in the money. So, and there I'm still making money on this trade right now as I speak, because this is a very large position here. And then I took a small amount of money and then I bought this out of the money up the top here. And this out of the money one is dropped right by 60%, which is only a small percent loss on the trade, but this 20% loss is like so much more greater than this loss here. So I'm still making money on this SPY trade right now as I speak. But it's happening to me in real time right now. I can see it with both my options here. But if I'm right about my call being 9,000 by the on this way here, if we do start to make our way up through to here, then this option here, this option here is probably then that's what's going to explode in value, right? This is where you could probably take, like right now for me, like number terms, I have about a $20,000, just so you know, I have a $20,000 position up here right now for me. That's what I've got for myself. And this one here is much, much, much larger. It's about 6 figures. But here's the thing. That $20,000 right now is down, okay? But if and that's a very small risk on my account, by the way, really small risk on my account on the total asset allocation. So on top. I'm just letting you know numbers. But if this does work, this here could be worth 7 figures. If we do get that, if we don't, I'm probably going to lose 100% of it. If we do, it could be worth 7 figures. So that's the way I'm looking at this one up here, because of the explosive of what happens with the volatility. So that's my nature of what I'm thinking there. So I think on number terms for me, if you're going to look at actual number terms, I think I'm down about 10K or something like that, 10 to 12K from here. And then I'm up 20K right now on this trade here. So I'm still net positive around 10K, 8 to 10K on both these trades here. So it's still net positive on these trades. But I'm just trying to show you in real time my positions right now. Now, obviously, if the market does roll over, I'm going to be losing on both these trades, short term anyway. But I'm just trying to share with you the numbers of how I'm looking at this here and my positions within the S&P 500 and how they're working right now and what's happening here. And I'm seeing it in absolute real time that even this in the money option, I actually got the call right and it did start to go up. Let me see if I can just remove it all. Remove it. Yeah. So even though I actually got the call right and the market did go up, this in the money option has started to increase in value. And so I'm still in a nice little profit from this down the money here. So yeah, bit of a real life option about where I'm positioned right now myself in the S&P 500 and my call, by the way. So when I make my call, I have money on this trade. Now, again, just so you know, my money on this trade, what I just said there, that's a small position of my total asset allocation towards this. Or that's all. Just keep that in mind. If I'm wrong, I'm yeah. So there's always a risk of everything, though. Yeah, actually, I wouldn't mind a bit more. I wouldn't be too surprised if we had a bit more selling next week, actually. Interesting times. I remember the 80s crash. The 80s crash. Hey, Ted's back. Oh, no. Ted's always been here. Ted said yes from Australia. Housing is our biggest bubble. So much money sitting there all in one basket. Yeah, Ted, if we look at the cycles of things, notice what the government's doing in Australia right now to help everyday Australians get into the market, right? They're helping with the 5% deposit, and they're obviously making it a bit more easier for people to buy property and so on and so forth, right? You know where that's going to ultimately head in the next few years. It's not going to happen now, but over the next couple of years, you know where that's going to ultimately head. It's very similar to what they did in the US. Easy money lending, and you know what I'm trying to say? So it's similar, not the exact same, but it's a similar thing that's happening right now in Australia. So it's going to cause, property market's still probably going to go up. There's probably a lot of demand for that. But over the next couple of years, we're going to see exactly right, Ted, exactly right. You could just see the writing on the wall. So one, a lot more fuel for upside in the property market because of that. Just like US, right? 2008 or before 2008, right? So that 2005, 6, and 7 period. Actually, no, it was more like 4, 5, 6, because 7 is when it started, the crack started the show in the property market up there in America. So it's more like 4, 5, and 6. Those few years were good times, right? Property market, boom, here we go. And everyone was getting involved with it. The government was helping out. There was leniency. There was like, easy money lending. Here we go. And then ultimately, it all ends in the same way. It's just the patterns repeating. So we can see what's coming down the road. And the most powerful, as you can see, everything's just about patterns. For me, it's about patterns. If I make a call on the S&P 500, right? If I make a call on the S&P 500, and I shared this bit before, but the call for me on the S&P 500, and if we do break 7,000, we're likely to go to 8.5 to 9,000, is not based off a guess. It's just based off patterns. Everything is patterns. That's all. Everything is just same patterns, right? Because the pattern is channel. And when you see the channel, if we do break, or when we do break, then we know we're probably likely to see a move up towards those levels up there. And again, the exact same thing happened here. There's the channel on the Nikkei. You measure from the high to low, you project that up, and you actually get the target of where it's likely to run to after it breaks out. Same for the DAX. Exact same thing happened on the DAX. There's your big channel that was in place. When you break out there from low to high, when you break out above the channel up here and start to move, where's the target? You project that up, and you can see that's where the target is. Now, it doesn't mean it's going to get there or it's going to stop there. It could keep going like we see here. But everything is just patterns, right? It's just a pattern that repeats. If we want to have some idea of what's likely to happen, not just a guess, well, then we need something to tell us that. That's where the S&P 500. So for me to say 9,000 on the S&P, I'm not making it up. It's just I'm showing you real examples of before Nikkei, DAX, after, now S&P. So while we're going through this herky-jerky period right now on the S&P, and I call it a herky-jerky period because it really is, right? The volatility is nuts. So what the catalyst will be, no one knows. Black Swan event. Are you talking about the property market, Ted? So, yeah, and that's all it is, guys. When we start to see whether it's economies, no, and that's all it is, guys. Right? That's all it is. It's just patterns, right? So, for example, what I'm saying here on the S&P 500, it's as simple as this. There is a pattern on the chart that when it forms, it gives you a high probability of an outcome. That's it. Why? How? So, like, I don't know. We don't need to know why, how, what's going to cause it, so on and so forth. We just know that a simple thing, there's a pattern, and if the pattern forms, the likely outcome is what? This. That's it. That's what's called trading, right? This is called trading. We don't need to come up with a story, which is probably going to be BS anyway, of why it's going to go to 9,000. So what's going to cause it to go to 9,000? I don't know. But if you see the way these markets operate, there's a pattern that repeats. And when it forms, this is the likely outcome. Not guaranteed outcome, by the way, guys. There's no guarantees of it happening. So you don't want to go, let's go load up the boat and have a big risk on our account. Like, that's not the case, right? There's also always an opportunity of it not working out. But if we're trying to get some sense of what's going on, then that's how I make my calls in the market. There's got to be some sort of pattern to it. Me calling short in the gold and silver market, or especially in silver, the pattern is big bubble 1, 2 exhaustion volume, 3 sentiment. So there's a pattern to that. Right now, I'm bullish TMF. Cycle analysis, we've been down for a long time. We're bottoming out. We're probably going to pick up. Like, it's just, there's a pattern that repeats to these calls here. It's not just coming up with an idea or a story. Because if I come up with a story of why bond market's going to rise, one, the story would make no sense to people because they're like, but everyone's dumping the bonds right now, John. They're all selling their bonds right now. They don't want to be part of the US dollar. That's going to be the logic, right? And logic says if that's the case, we should be going down. If that's the case, and China and all these countries are dumping all their bonds right now, selling all their bonds, interest rates should be skyrocketing and the bond market should be going down. But the opposite is happening because the opposite does happen to what we think is going to happen. And this is where it could totally screw with people. Like, if they're selling all their bonds and there's billions of dollars worth of bonds are being sold, how come the bond market's going up? How come the interest rates are getting dropped? How are we getting a big drop in the interest rates right now? And then, because it's the opposite of what you think. And when you start to think in opposites to herd what the herd's thinking, then you start to get the edge there. I know it's weird, right? It's a weird dynamic, but this is the psychology of financial markets. This is why financial markets are around, by the way, because they know 90% of the people don't make money. It's a little vacuum cleaner for most people out there. But then those who get on the other side, like for me, I'm on the other side now of 20 years of bullshit. No, not 20 years of bullshit, but 20 years of accumulation of experiences of this. And me being part of the wrong side many times for many years and thinking something's not right here. I'm going with the herd. I'm doing what the herd's saying. I'm losing money. Maybe I should do the exact opposite. And then I start doing the opposite and then I make money. But doing the opposite and then making that public, get ready for the steamroll of comments. And I actually hope for that, by the way. If I don't get that, I'm like, oh, maybe my call is wrong. But for the bond market to go up and the interest rates going down, as an example, the last couple of months, it's been John's got it wrong. I told you the bond market's going down. It's not going to go up. That's dead. Like, those comments, I got them. You're an idiot, John. You have no idea. Yeah, John's been underwater for many months now, you know. Those sort of comments. I'm like, cool. Bring it on. Keep it going. I love it. It means I'm probably going to be right even more. And it's hard, right? It's hard. Especially, again, and this is where it does take, how you learn trading is via 2 things. One, you join a coaching program like mine at getjohntop.com. And I actually take you through a process of 6 to 12 months of helping you understand this stuff, which taken me 20 years to figure out. So you pay for the shortcut, basically, of instead of taking you 20 years. Or 2, you spend decades and decades and decades losing a lot of money to then go through a lot of pain. And then you start to figure it out because then through that pain becomes lessons and lessons become experience and experience then becomes good results. That's the only way that I've gotten good at this. Even though I bought courses and mentorships, I've done the most bullshit thing in these markets. I'm thinking the wrong way, I'm approaching the wrong way, I'm doing this sort of stuff. And then I just lost so much money. Just losing so much money. But through that, I'm so grateful that I took that as an experience. And I'm like, okay, well, obviously did something wrong here. And then I went back and looked at it and studied it. And then guess what? And then from that process, I started to connect the dots year after year after year after year after year. And now, guess what? That's why I can make these calls in front of you. because I've seen like the same pattern with silver recently. Big vertical spike up, bubble move, exhaustion volume typically happens if it's been going up for a while and we get the exhaustion volume, right? And I'm talking about the SLV here because that was the one with the volume there. This big volume spike back here, right? Which is this one right here, right? That volume spike was right there. So right here on the volume spike after a big bubble, whenever you see a big move up like that, and it's been going up for many months straight up without any pullback, and you get an exhaustion and you get a big volume spike, that's likely to be an exhaustion volume. And then we end up getting at least what? Then we end up getting at least a high to low, a 50% retracement. It's just the pattern that I've seen many times happen again and again and again and again and again. So it's not like making something up. And again, this is the reason why, like, if you think about coaching, right? One of the reasons why I coach is because I'm trying to share with people things like this that's taken me 20 years of experience and losing a lot of money. So therefore we can flip it and then take advantage of it. And that's exactly what I did. And a lot of my actually elite coaching program did myself. Because with all my actual trades that I'm actually doing right now, I share all that when it comes to, you know, the actual, my elite group. I don't share all my trades on here, but my elite group sees everything I do. And then they know exactly the day I went short on the SLV. So that's all it is, guys. That's all it is. So if you ever think about what coaching is all about, it's a shortcut of experience. My 20 years of experience of things like this, and then you might be thinking the wrong thoughts about these markets. And then suddenly that wrong action, so on and so forth. So then it's like the teaching of the right thoughts, and seeing the patterns that repeat, how to then have small risk when you do get it wrong, you can protect yourself, the bigger profits, all that sort of stuff. That's all it is, right? And that's the reason why we invest in coaching. For me, it was all about, and I know that because I've invested well over 6 figures with my mentor, or one of my mentors anyway. And he's just made a huge difference in my own trading career. And thanks to him, he actually slowly got me on the right track. Otherwise, I probably wouldn't be here right now. Let's go back to this one here. Let's see what's happening with the. Yeah, we're probably going to get another drop next. I would actually say we'll get a bit more weakness next week, looking at this level here. Yeah, we're probably going to have another drop early next week, I would say. WTI. That's not oil, is it? Thrifty. Let me actually see. Let me WTI. No, it's an oil stock. Is that what the code is? WTI? Let's actually go stocks. Oh, this one here, I'm guessing. This one here, yeah. It's a cheap stock hoping for a breakout. Yeah. Well, there's definitely good support at 0. We're definitely at that low level, aren't we? Yeah. What I would like to see, Thrifty, personally, is I would like to see some sort of bottoming pattern. So I'll share with you the exact pattern that I would like to see here. If we got this, then I'd actually probably even buy some myself. Is this, if we get, now I know we're looking at a big chart here, but if we end up getting, and this is what you don't want to see, but I'm trying to share with you what would give me a high probability of this being a bottoming pattern here, is that if we flush down through here like that, past this support level, but then we come right back up again like that. And then we ultimately start to see that through there. If we got something like that going on, then that would ultimately tell me that we're now bottoming out. So that would be more of a bottoming opportunity. We're still going on a bit of a downtrending through here. So the downtrend's really not over yet. But if I'd see something like that, it would give me an opportunity to say, okay, and the Aussie dollar did that just recently. I'll show you here. Actually, I'll show you by this chart here. Right, so see this here, right? See, this is the pattern I was talking about here. Been going down, 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 down. There's a support level through there. As you can see, it had all the support. Look at this here. So it had a big flush down. So it had a big flush down through here, and then it reversed. So this, as you can see, this was the that flush down past the major support. Then it reversed back up. Once we got the reverse back up, so once you get something like that going on, right? So once you get something like this going on, we know this is a major support level here for many years. It had a fast flush down, but then it quickly reversed right back up again. If we got something like that, which actually looks really similar, right, to the pattern here, then that would give me confidence that it's actually basing out. And then you get what? And then ultimately, then that was the bottoming pattern to see the further 12 months having a big rise. So WTI, once again, WTI stock, that's what I would want to see myself to say that it's actually bottoming and it's not just basing out. Yeah. So it's just a pattern there. Again, I'm just trying to give you my view right now. I'm not saying that's going to happen, Thrifty. And Peter, I saw your comment there. I'm not saying it's going to happen, but if I was looking for some sort of bottoming pattern to end this downtrend, I would want to see that. I would want to see that there. If we did get that, which once again would look something like this here, it would hold. No. It would hold. We might get a flush down through here. This is a weekly chart, by the way. Fast flush down. And then it returns and then does something like that. Then that's when you start to, if we do get something like that going on, then I would say there would be a high probability of us then starting to make our way over the next 12 months up to around about that level there. Which, by the way, that would be a 300% move. So if we've got something like that going on, we're probably going to have another move back up towards the highs up there. Hi. Thoughts on gold? I'm in. You're in the live session? Thoughts on gold? It's going up. And it's going down. Gold's actually holding quite strongly. Who's clicking that button? Someone's having a field day with that love heart emoji thing. Love it. Oh, that's funny as hell. Having a field day with that love heart emoji thing. Woo! Is it realistically to wait for 4,500 on gold? We were there before. So we were there before. But right now, as I speak, maybe that's all it's going to give you. Because it did come back down towards this trend line, big two, right? So the way that I'm looking at this level here, if we break these highs through here on a short-term TA basis, we break that high, which looks like we're trying to right now, we're going to make another all-time new high for gold. Because it's just continued this beautiful upward trend. Look at that there. Big, beautiful upward trend here. Ba-boom, 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 ba-boom. And went up, 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 up. Got too far stretched. Had a big fast correction. Correction over. Big uptrend still intact. There's the low. Holding. If we break this level here, we're probably going towards 6,000. Then I would say, why 6,000? It's a round number and it's just a made up target. But it's a round number, and markets love round numbers, so that's probably where we're likely to head to. So right now, it's actually been holding. You can see even just recently, it's been holding quite strong there, right? Look at that there, strong hold there. What is that? No idea. Anyway. Strong hold there. Strong. So it's actually starting to hold it quite nicely all through here. So even on a short-term basis. This is real short-term TA, by the way, guys, not big picture analysis, anything like that. But even from a real short-term TA, let's just make that a lot thinner, actually. We're starting to get that through there. So it's actually compressing up even on a short-term basis. So big picture up and small picture even up as well too. So we break 5,100, we'll probably then start to make our way up towards that 6,000 level. We're probably going to make another high, another new high there. And that's because remember, this is that's all it may have given us then. Because we are still, even though we had the drop doesn't mean the trend is over, right? We have a move up, higher lows, higher lows, higher lows, up, 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 came down, hold, hold, hold. So all this is what? Just a beautiful upward trend, right? So then we may continue, just continuing this overall upward movement for me. That's what it's doing right now. So again, that correction, what we saw in gold and silver, maybe that's all we needed before it balanced out the price and time, the big moves up and so on and so forth. Price and time, these are the price and time phases, basically. What that simply means is when you get too far away, we need a bit of a pullback. A bit too far away, we get a pullback. And that's what causes trend analysis. So that's all we did through here. Just felt like it's too fast. So, yeah. But that being said, too, we've got to look at the if scenarios, right? But then that means if we do break down and start to break down through to here, let's look at that scenario then, because we never know, right? But if that happens, then Let's look at some other scenarios here. Then that'll be your next target there. So if this scenario happened, it might rally up and then we might come back down to 4,000. So that's what you'd wait for. That's what you see here on a short-term level here. What's the time? Oh crap, I've got to get to my lead group. So that's the short-term TA there, what I'm noticing. But for now, it's pressing up. We're in a beautiful upward trend. And that's it there. So anyway, guys, that's it for me today. There's your couple of hours of live stream. Thank you so much, guys, for joining me. For you guys watching replay, thank you so much. I appreciate every single one of you, but I've got to get to my elite group right now. Have an amazing day, everybody, and I'll speak to everyone real soon. See you, traders.